Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thanks very much for joining us. Coming up on the show today, Philip Peterson, Chief Investment Strategist at IG Wealth Management, will be joining us for the hour. In 30 minutes, Michael Luce, CEO of Porter Airlines, will be here. And we want to hear from you this morning on First Call. Reach out with your questions on sectors, and we'll have Philip Peterson answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address, firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. U.S. President Donald Trump is threatening Iranian energy sites if the Strait of Hormuz is not reopened soon. In a post on social media, Trump said the U.S. would respond by, quote, blowing up and completely obliterating Iran's power plants, oil wells, and Karg Island if the strait remains closed. The remarks come after a brief pause in attacks on energy infrastructure as the two countries held talks aimed at easing tensions. Bloomberg News is reporting that the federal government is working with Quebec to prevent the closure of the country's only copper smelter after Glencore threatened to shut it over new pollution control requirements. Last month, the company suspended plans to invest nearly $1 billion in its Quebec operations after talks on reducing arsenic emissions collapsed. Quebec is now proposing legislative changes to address some of Glencore's concerns. The Canadian government has awarded L3Harris Technologies and Airbus 3 long-term defense contracts with a combined $1.5 billion. L3Harris secured 2 of the contracts, totaling about $1.1 billion, while Airbus received the third, roughly worth about $370 million. The agreements cover in-service support for Canada's new tanker fleet, including medical evacuations, air-to-air refueling, and passenger transport. And now our top line story, U.S. President Donald Trump threatening to destroy Iran's energy infrastructure if no deal is reached to end the war. For more on the latest in the Middle East and how this conflict is moving the markets today, let's bring in our guest for the hour, Philip Peterson, Chief Investment Strategist at IG Wealth Management. Philip, thanks as always for joining us.
Pleasure to be here.
And never a dull moment right now. How do you interpret this, what the latest social media posts from
Right. Well, if you follow along with what President Trump has said over the last couple of years, starting with tariffs, then with Greenland, and now with Iran, it seems that he's playing the same book, which is make the threats as far out there as you can, and then you roll them back. And perhaps this is the same thing. We know attacking Iran's energy infrastructure would throw oil prices higher for an extended period of time, not just with respect to Iran's oil, but it would change the global supply dynamics. And then attacking their power plants, well, that's a war crime. So, I think that's more bluster than anything else. That would be a real step in the wrong direction for the United States.
But I guess the danger here is we know this, the taco, and if we dismiss this, will this drive him further?
Great question.
Make him more likely to do something even more extreme.
That is a great question, and that's the unknown, right? Everyone's sitting there hoping and leaning on the taco trade, the Trump always chickens out trade, and we saw that last Monday, where just before the market opened, it was all of a sudden we're in great talks, everything's going nicely, and they gave me a gift and all the rest of it. And so I think the market is hoping that is the case. But you also manage for the worst case scenario, that is oil prices can stay higher for longer, and that weighs on the global economy.
And what happens if this does actually go through, that he actually hits Karg Island or tries to take Karg Island? What happens, and are we looking at global recession, do you think?
Potentially, yeah. What we're looking for is oil prices doubling. So if we get oil prices in the $140 range and stay there for an extended period of time, then the risk of global recession increases every single day that those prices are at that level.
And I'm always surprised. Like, it felt like we saw oil hit 120, and then it's dropped back down, and it's up, but it seems manageable. Like, it feels like it should be higher than where we're at.
Exactly, and that's where perhaps we've gone from this global glut of oil, say a month and a half ago, to much tighter supplies, but enough supply to meet the global demand and not push prices up to that dangerous level. So that is what everyone is watching, though, and because again, if oil prices get too high, it's a tax on the global consumer. It is a global commodity, and it will affect all of us. And anytime that we go to the pump or basically buy anything that has been transported using fuel, it's going to cost more. So it's a welcome sign that oil prices have not broken that $120 to upwards of $140 barrel level. And so I think the market is hoping that things stay where they are.
Yeah, they're being, I was just looking, they're up slightly right now. They're about a half point down in the States on the futures. But is that a lot of people just kind of trying to find some hope?
I think, well, right now, I think it's based on the supply dynamics, that there is enough supply out there and ships are getting through the Strait of Hormuz that it's not causing massive disruption and dislocation in terms of global supply. But it's one of those unknowns. We just don't know at this point.
And with the Canadian markets, what happens? TSX is down. Last week it was actually up slightly. Still not, I think it's down ever so slightly for the year. But to a degree, it's weathered it better than the U.S. Will we pay for that if this settles down?
We could, yes. So why is it weathered better? Partly because of oil prices being up. That's good for the energy sector. The energy sector has jumped significantly since the start of the war. That's been balancing that offset from gold being lower. But this is typically what you see. When you get an oil price shock like this, the TSX tends to outperform. That's what we're seeing right now. That's the positive, where Canada can be a defensive market in times of oil stress like we're seeing.
All right, we got to wrap it up on that note there. Lots more to talk about, though, and we're getting some breaking news. Air Canada CEO Michael Rousseau is going to retire by the end of the third quarter. We'll bring you more on that after the break. Breaking news. We were just talking about Air Canada Chief Executive Officer Michael Rousseau announcing he is leaving after creating that public relations fiasco with the English-only video statement after the plane crash at LaGuardia in New York. Philip, surprised? He's retiring, I think, is in air quotes for this one, isn't it?
Yeah, I think not much of a surprise here. There was pressure last week that was building not only in Quebec but in other areas of the country that if you're going to represent a bilingual airline, you should at least make an effort to speak in both official languages of the country.
And he said over the years he's tried, he's taken the lessons, and he just wasn't grasping it. But he's had this controversy before. In 2021, he gave a speech. So was this the final straw, you think?
I think so, and especially comments out of Prime Minister Carney, who said lacked compassion, lacked judgment. I think he was spot on there. I think Air Canada could have avoided this by, if you can't speak French, if you're not comfortable with it, fine, bring in one of your officers, senior officers, who is comfortable with the language to deliver the message.
Yeah, and the video, I think the video itself took a lot of heat too, because it took almost a minute and a half before you finally hear him say, We're terribly sorry about what happened, and to the condolences to the family. This is one of those PR cases I think most companies should be studying right now. That's
exactly it. I think you come across these every once in a while, and it's like this is the example by which you want to avoid in the future, and just be a little bit more respectful in this country and to your employees and to those that have been affected by it.
So going forward, I'm going to assume they're going to have French mandatory. For the next potential CEO, do you think?
Absolutely. If not someone that can speak French coming in, certainly the mandate would be that, okay, now you're going to take lessons and you're going to make an effort. This is what we do in our company, and I think this is what others should do as well.
Do you speak French? Are you bilingual?
I've been taking lessons for the last 10 years.
How's it going?
Très bien.
It's hard, but it's also hard to a degree, but now he lives in Montreal, so it's a completely different thing. But if you're not using the French on a regular basis, or any other language for that matter, it's not easy to maintain it.
It is not easy to maintain it when you're just doing lessons and having conversations as often as you can. But again, it's the effort that is most important, and I think there was a lack of effort in this part.
And any concerns if they want somebody who's bilingual, they may forego maybe some of the skill sets, or do you think they'll maintain that as one of the prerequisites, and they don't make the mistake of maybe hiring somebody who has French, but maybe shouldn't be the CEO?
No, I think you can do both. You can satisfy both. If one is deficient, first off, you're looking for the best leader that you can find, and then you can apply the French on top of that. Again, there are plenty of French tutors out there, excellent French tutors out there that can certainly help with the language and bring you along competently enough that you can deliver a speech, even if you're just reading it comfortably in French.
And just deliver it. And of course, I forgot about this last summer, the strike, how it was handled.
Exactly. And so I think that the board maybe came to the conclusion that perhaps we don't have the right individual in place, and it's time to move on.
I'm fascinated by that. I mean, what they go through those interview process and how does it get to that? How does it get to that point?
Well, that's a good question. And I think many boards have suffered the same thing. We've seen this with big companies such as Disney, for example, Home Depot, other companies in the United States and Canada, where you think you have the right individual, and at the end of the day, perhaps it's not.
All right, we're going to wrap it up there, but we'll be back with Philip Peterson, Chief Investment Strategist at IG Wealth Management, to see why interest rate expectations are on his radar. All right, let's see how things are shaping up on the markets. We start with U.S. futures and some optimism right now on Trump's report that maybe some ships will get through the Strait of Hormuz. He said Iran has been promising that. So right now, Dow and the NASDAQ and the S&P 500 all up by about 0.7%. In Asia, a down day there, of course, before that news. So you can see the Nikkei always volatile, off by 2.8, Hang Seng by 0.8, and the CSI 300 by a quarter. Heading to oil, or heading to Europe, and oil, of course, having an impact there. It's a mixed bag. Well, actually, they're all in the green now. They just jumped. FTSE up by nearly a full percentage point, back up above 10,000. The CAC up by about 0.28, and the DAX by 0.2. TSX on Friday, it finished up a little under a quarter point, up for the week as well on a surge by materials and energy on Friday. Some of the movers, let's take a look. Methanex up by nearly 10%, Strathcona by nearly 9%, going the other way. MDA Space up by 6.6%, and Curaleaf off by about 7%. Taking a look at the metals, and everybody's in the green again right now. Gold pushing up towards 4,600, silver up above 71, and copper hovering around that 552 range. Western Canadian Select from Friday closed up 3.6%. And today, WTI, let's see what it's doing with all the news we're seeing unfold. Yeah, back over 100 now. 101, up nearly 1.6%. Time to see what's on the radar for Philip Peterson, Chief Investment Strategist at IG Wealth Management. And Philip, you're seeing diverging interest rate expectations. Your take was interesting. I'll let you...
Yeah, this is where we're paying attention to both the currency markets as well as the futures markets for Bank of Canada rates and rates in general going forward. And we're seeing a real discrepancy between the two. So on the one hand, you have upwards of 2 rate hikes priced into the futures market for the Bank of Canada. We don't think that's going to be the case at all. And that's what's being reflected in the currency markets, where we've seen the Canadian dollar softer a bit over the past couple of weeks. When you look at the currency markets, and we value the Canadian dollar relative to the interest rate differential between Canada and the United States and oil, but it's been trending lower, which has been a bit of a surprise with oil prices.
Because it was on a bit of a ride.
Exactly, it was. And we think that's the currency markets on our side, which is the Bank of Canada is more likely to cut than raise rates. Yes, we're likely to see higher inflation because of oil prices, but I think the bank will see through that. They'll see through that, understanding that this is what transitory actually looks like. Oil prices will be high, and then they'll come back down at the conclusion of the war. And so if anything, the Bank of Canada won't raise rates to fight that inflation, but they might cut rates to provide Canadians a little bit of support. Exactly.
You're going against the grain on that.
Absolutely. We are very, very against the consensus on that. We read it every day that some are saying the bank's going to raise again 1 or 2 times. We just don't think that this economy can manage that right now.
Do you think one cut would be enough, or could they...
I think it would be a symbolic cut. Yes, yeah. I think it would be one. Raising rates or cutting rates won't change the price of oil, but it might change sentiment a little bit. It might provide a little bit of relief, certainly to the mortgage borrowers that have been facing much higher rates from renewals, say, 5 years ago.
Yeah. And then down in the States, where do you think the Fed's going?
Yeah, I think this is where there is going to be a difference. Yeah, I don't think Warsh is going to be able to come in and cut like Trump wants. I think more likely he is going to have to raise. So when we model out U.S. inflation, we do see it sticking around at the 3% range, even before oil prices. Once you factor in oil prices, could get closer to 4%. Now, let's, again, look through oil prices, but at the 3% range, it's unlikely that they'll cut. Right now, no hikes or cuts are priced into the U.S. futures curve. But if anything, they're more likely to raise rates than to cut rates in 2026 and the first half of 2027.
But there's a lot of political pressure right now on the Fed because of what's unfolding with the midterms coming up.
Yeah.
Will that be enough pressure, or do you think?
Well, again, Warsh is only one individual on a committee.
12%,
Exactly. So he's going to have to convince the majority to lean his way. And he's only just been dovish, right? If you go back to 2006, 2011, when he served as a governor, he was more hawkish than anything else. So which Warsh are we getting here is the ultimate question.
And then, of course, the rest of the committee, though, too, to see, which I think that makes a big difference, doesn't it, having that 12-person committee?
It does, and we actually think that it's a good thing because it provides checks and balances. You can't just nominate a chair that's going to be bearish or dovish and just cut rates to the whims of the president. It actually has to be basically voted by consensus, by committee, to either raise rates or cut rates, and it is going to be heavily data dependent and dependent on the judgment of those voting members.
And so how do you think the markets respond then if there actually is a hike?
Well, I think there is the leanings that more likely we could see a hike than a cut. I think the market is suggesting that right now by eliminating any possibility of cuts with the U.S. And I think right now, depending how far they go, if it's just one, I don't think it's a big thing. But if the Fed signals that, no, we're probably now going to reverse course and might have to hike a couple of times, that's going to put pressure on the equity markets. It's going to put pressure on your valuation metrics, and that could lead to softer S&P 500 performance overall.
And then if there ends up being a larger gap between the U.S. and Canada, who benefits? Who do you see taking advantage of that?
Yeah, see, we have to think about it in terms of the currency, right? So if the U.S. starts to raise rates as the Bank of Canada holds firm or cuts, that's going to put downward pressure on the Canadian dollar. Right now, we've got target to 71 cents based on that. But if the divergence continues to increase and that differential is in favor of the U.S., stronger U.S. dollar, weaker Canadian dollar.
All right, we've got to take a break on that note there, but we have lots ahead, including Michael DeLuce, CEO of Porter Airlines. And after the break, our phone lines, of course, will open up soon for our first call segment. You can reach us at 1-855-326-6266. Send us an email, firstcall@bellmedia.ca. Air Canada CEO Michael Rousseau is going to retire by the end of September. The move follows backlash after he released a condolence video for victims of the LaGuardia airport crash in which he did not speak French. The company says the search for a new CEO is underway and that the ability to communicate in French will be considered in the decision. U.S. President Donald Trump is threatening Iranian energy sites if the Strait of Hormuz is not reopened soon. In a post on social media, Trump said the U.S. would respond by, quote, blowing up and completely obliterating Iran's power plants, oil wells, and Karg Island if the strait remains closed. The remarks come after a brief pause in attacks on energy infrastructure as the two countries held talks aimed at easing tensions. Bloomberg News is reporting that the federal government is working with Quebec to prevent the closure of the country's only copper smelter after Glencore threatened to shut it over new pollution control requirements last month. Now the company suspended plans to invest nearly $1 billion US into its Quebec operations after talks on reducing arsenic emissions collapsed. Quebec is now proposing legislative changes to address some of Glencore's concerns. And a quick peek at the markets. They are rallying today, liking, I guess, what they're hearing from the president, maybe. Right now, the Dow up by about 0.8. They're all up around 0.8 right now, the NASDAQ and the S&P 500 as well. Porter Airlines is facing expansion with a growing fleet and more routes. It's partnered with Macquarie Asset Management on a multi-million-dollar investment to build and operate a new terminal in Montreal. Here to discuss how regulation, infrastructure, and growth plans could impact the airline's long-term outlook is Michael DeLuce, CEO of Porter Airlines. Michael, thank you very much for joining us.
Yeah, thank you for having me.
We have to get it out of the way. I want to ask you your thoughts on what's unfolding with Air Canada. Can we get some thoughts on the news that the CEO is stepping down?
It's not really our place to comment. I had a lot of respect for Michael Rousseau and thought he did a great job at Air Canada, and it's unfortunate, sort of the recent events that really led to this. But Michael did a very strong job leading Air Canada, and the recent sort of events are unfortunate.
Okay, and let's talk about what's happening with Porter. Montreal Airport, you're getting ready to take off in June. What are we going to see coming out of that airport? That's an ambitious project.
So last Tuesday, we opened to the media the new terminal at Montreal Metropolitan Airport, also known as the Met. And it is the single most ambitious launch of a new airport by any airline in this country. We are starting on June 15th, 12 new destinations, all in the first week of operations with 138 flights. And the Met terminal and its location will transform air travel in Montreal. The airport is conveniently located for 50% of the residents of Montreal. It's a faster on-the-ground drive time to the Met. But for visitors coming into Montreal, this is a much easier way to get to downtown Montreal. And you can see on the photos you're showing that, much like the Billy Bishop Airport, which we developed back in 2006, this is a comfortable business class lounge type environment for all passengers, regardless of fare type or which airline you travel with. And it will truly transform and make Montreal air travel easy again.
Michael, it's Philip Peterson. I have to ask, with oil prices where they are and jet fuel prices increasing, how is Porter adjusting to this higher price regime?
Well, everyone's watching that closely. We've seen fuel prices rise fairly dramatically over the last month. We are seeing a very strong revenue environment at Porter. Fares are up significantly on average as we continue to see maturation of our route network. But all airlines worldwide are really watching what happens over the coming weeks and months with fuel prices and see if further adjustments are needed.
And going back with the Montreal, the airport, the Metropolitan, it's still not officially a Metropolitan, if I'm not mistaken. You're only doing domestic flights. Is that enough? Is there enough volume there for you?
Absolutely. We've launched 12 domestic routes, really coast to coast, Vancouver, Calgary, Edmonton, all the way out to Halifax and St. John's. And I can tell you, we launched sales last Tuesday, and the demand for this airport and an alternative within the Montreal marketplace overwhelmed even our greatest expectations. So there is very strong demand. This clearly is something that would differentiate itself in the market. And eventually over time, as the airport takes hold, the community loves the airport. If there is a desire for us to look at international flying, whether that be to the U.S. or Mexico, Caribbean, that's certainly something we'll look at with all the stakeholders.
Now, how would you be able to get that? I thought Trudeau Airport has the exclusivity for international flights.
Well, back in 1992, they were granted a monopoly over international flying, though. That was in a context where the Met didn't exist. And the Met will be in the marketplace, and really it will divide the city and residents between which airports they each go to. Whenever you have a multi-airport system, people go to the airport that's most convenient to them. And so the context of ADM having a monopoly over international routes, I think will be something that will be discussed quite extensively, because if you live 5 minutes away from the Met, why would you subject yourselves to a 50-minute drive across the city in traffic, both from an environmental ESG perspective, but as well just serving the community? That makes no sense. And so I think the parties will all come together, and there are additional factors as well. Obviously, YUL faces very severe capacity constraints. And so ultimately, relieving some of that pressure is a good thing.
And we've seen this expansion play out over the last couple of years, expanding into Pearson, expanding into Hamilton, not only with more regional routes, but long-haul routes as well. How do you balance or prioritize between the two and when you think about expanding to other areas?
Well, really, we've focused our expansion on Eastern Canada, out of Toronto, Ottawa, Montreal, Halifax, but as well out of Hamilton, as you mentioned, and now serving both Toronto airports and soon to serve both great Montreal airports. Will be the only airline serving both extensively with operations. It is a balance where we dedicate the aircraft resources, but we have taken on a delivery stream of up to 100 Embraer E195 E2 aircraft, which is a state-of-the-art narrow-body aircraft that allows this expansion to really touch all of North America from Eastern Canada.
And now going to Billy Bishop in Toronto, the province has said it wants to take over the city's portion of it. You have long pushed for jets there. With the Portlands developing, how do you balance those two things in that city? Because any jets coming in, if I'm not mistaken, would have an impact on any kind of development in the Portlands.
Well, development in the city has certainly coexisted with the airport for many years. Nothing will change with regards to that. Whether jets are allowed or not allowed at Billy Bishop, the same parameters exist between development and the airport. Flight paths are protected, and so jets has no downward impact on development of the city compared to what exists today. And the Billy Bishop Airport is a clear economic driver for the city of Toronto. Over 90% of residents are highly supportive of the airport, and the province recognized that it is a key economic driver not only for the city of Toronto but for the province of Ontario, and really that's why you saw them step in last week with some changes to the overall governance structure of the airport.
All right, one last question. Talk of an IPO, is that talk or is that something that may be happening?
Right now, we're focused on executing on our growth plan. We're fully financed. So there's not an imminent IPO, but it's something that in the longer term horizon, of course, we'll eventually look at.
Okay, Michael, thank you very much for joining us today.
Thanks for having me.
Michael DeLuce is the CEO of Porter Airlines. Still ahead, today's market drivers with Bloomberg's Divya Balji. And, of course, our phone lines are open. Philip Peterson, Chief Investment Strategist at IG Wealth Management, is taking your questions on sectors. Call us at 1-855-326-6266. Email first call at bellmedia.ca. All right, let's take a look at some of the early market movers. We're joined now by Bloomberg's Divya Balji. She is the managing editor for Breaking News in the Americas. And Divya, thanks as always for joining us.
Happy to be here.
All right, a big announcement between Cisco and Jetro.
Yeah, I mean, this one is quite interesting. I have to say, I wasn't expecting this to be the deal that gets announced on Merger Monday. Cisco, of course, we all know this company, they do provide food to hospitals, schools, companies. They are making a very large acquisition that's over $29 billion of a privately held company called Jetro. Jetro now is actually quite the complement to Cisco's business model at this point. Jetro focuses more on small business owners, small restaurant operators. They have this whole model of cash and carry, a wholesale business. So people go in, buy what they need, and they leave with it, as opposed to delivery and cooked food and things like that. So this deal seems to be a good complement, but it is an incredibly large deal for Cisco. If you were to look at Cisco's market cap, it's $39 billion. They do plan on funding the cash portion of the deal with a lot of debt that they have, plus $1 billion worth of cash. The other thing that's interesting about this deal is also the fact that Jetro is actually owned by a 94-year-old South African billionaire. Is it possible that he was looking at, moving his control in the company into a much larger company? The company, Jetro, will continue to be a standalone firm within Cisco. How long will that last? There's a lot of questions out there about that whole family-owned and family-controlled portion of this. But overall, seems like a good deal for Cisco at this point to bring on a very complementary business.
All right, and the K economy still going strong, judging by Ferrari's May earnings release.
Yeah, I have to say I did scratch my head a little bit about this one. JP Morgan is maintaining its rating at a buy equivalent rating, but they are saying that when Ferrari reports results in May, at the start of May, they do expect to see pretty solid numbers come out of it, that the company will meet its full year forecast that it provided already. What they did talk about a little bit was about the cash flow guidance and how that's where this company is going to meet that guidance, and that is an important figure to pay attention to. But that being said, given the current situation that we're in the world with geopolitics, the price of oil, that's where I think I scratched my head a little bit. Shouldn't we be paying more attention to a forecast that they might give for the future quarters, given perhaps sales might drop if the price of oil stays this high? It will be interesting to see how the market reacts to when Ferrari reports in early May.
All right. TV Balji, thank you as always. Bloomberg's TV Balji. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including CrowdStrike. All right, let's take a look at some of the notable analyst calls and recommendations. The ICC has initiated coverage of Alcoa with a recommendation of outperform. Aluminum stocks, including miner Alcoa, are up after a rally in the metal price following Iran's attacks on Middle Eastern aluminum facilities. CICC sets the price target to $73.20 US. CrowdStrike is up in the pre-markets after Wolfe Research analyst Joshua Tilton raised the recommendation on CrowdStrike to outperform from peer perform. The price target is set to $450 US, implying a 22% increase from last price. And Jefferies analyst John Colantuoni raised the recommendation on Expedia to buy from hold. The price target, $300 US, implies a 33% increase from last price. For more on CrowdStrike, let's bring in Philip Peterson, Chief Investment Strategist at IG Wealth Management. What do you think of that one?
Yeah, this is an interesting one because CrowdStrike not too long ago was taken down because of the whole AI is going to replace everything, including cybersecurity. And we would be aligned with the analyst here is that we think that there's upside to CrowdStrike. We don't think that any chief technology officer or chief information officer is going to go to their board and saying, we're replacing all of our cybersecurity with this Anthropic offshoot. We don't know if it's going to work or not yet, but trust us, that's just not going to happen. So companies will pay for premium providers, and we think CrowdStrike is one of those premium providers.
In some way, it feels like there'll be a kind of a separation, won't there? There'll be the elite, and the value of them will be matching that eliteness.
Yeah, there'll be companies that you rely on, have come to rely on and depend upon that cannot be replaced by an AI alternative. And then there will be others that will be replaced by an AI alternative, but we don't believe CrowdStrike is going to be one of those.
All right, what makes them so solid?
Again, it's just the fact that their technology is proven, they're reliable, they're one of the leaders in the industry, and this is so important to businesses that you can't just alter it or take a chance on some emerging technology that hasn't been proven yet.
And are they incorporating AI, obviously?
Oh, for sure they will. They will be. Every company will be utilizing AI in one way or another. And so that's where, CrowdStrike or Salesforce or other companies like that will hold an advantage. They have the technology and they can utilize AI to their advantage and to their clients' advantage.
Well, and if they know how to evolve, right?
Exactly.
I always bring up Warren Buffett, right? What was his original? It was a wool. His original company was a textile.
Berkshire Hathaway, exactly.
Right? It was a textile.
Yeah, that's exactly it. And so, these companies, they're going to be as well versed in what AI can do and how they can embed it within their ecosystem as anyone else. But I think they'll be able to do it better because they're starting from a higher level.
Yeah, gives them that much of an advantage. All right. We've got more coming up right now. Time for first call and first email. And for that, we asked Matthew what his email is. And he says, metrics seem strong. Gold is still on the downtrend, but Agnico Eagle Mines is at plus 8%. 5D. Thoughts on this company for long? it is currently a big portion of my portfolio.
Yeah, first, Agnico is one of the better performers or the best producers out there. They have one of the lowest cost structures, and so they have been benefiting from not only the gains in the price of gold, but being one of the better producers. So, even if gold prices hold at these levels, we don't need gold to go up for these companies to generate significant profits going forward. The value of the gold that they're mining is worth a heck of a lot more than what it was, say, a year or two ago. Their production costs really haven't changed at all. I mean, maybe fuel is driving that up a little bit, but not significantly. So the difference between their production costs and the price of oil is pure profit.
And with gold itself,
Yeah, gold's an interesting one. So we don't have a huge upside on gold. We actually think that it is above its fair value range. We would put fair value at around closer to 4,200, although it might not get there, could go back up. But we think the big momentum swing in gold is behind it. That was last year and perhaps the year before. Here, we measure gold relative against the money supply M2, and that would suggest that gold is, again, in that fair value range, probably not as much upside, not as much downside, but probably, market performance, call it at that.
yeah, people haven't really looked at it as a safe haven, have they?
No, and I think that's because it came from a strong momentum position, a strong overbought position, and we heard earlier that maybe it's a little bit oversold, but really I think that the gains have been front-run, and so thinking that gold can go to 6 or 10,000, sure, it could, but should it? Probably not.
All right, we'll leave it on that note there. And another email, this one's from Lev. Can I please get your guest perspectives on the utilities sector?
Yeah, this is one that has really interesting dynamic right now. One, utilities are levered to energy prices, so as energy prices are up, utilities will do better. But if you're concerned about the risk of recession from higher energy prices, then utilities also act as a defensive play. So it's kind of giving you the best of both worlds right now. It's defensive, but also benefiting from higher oil.
And if oil drops, so what happens?
If oil drops, then you would expect utilities to come off a little bit, right? You're going to give up some of the gains.
I don't expect anything right now.
Right. Well, it's hard. It's hard. It changes by the minute depending on the tweet or the text that comes out. But yeah, you would expect the energy sector to give up some of the gains that we've seen in the last month. Utilities to give up some of the gains in the last month as well.
All right. This next email is from Ryan. Philip, would love your thoughts on the technology sector.
Yeah, and this one is very interesting. I think CrowdStrike kind of rolls into technology overall. So depending on how you look at it, some tech stocks are down by a significant amount, looking 40, 50% or more.
Yeah, huge. The Mag 7.
Exactly. And if you look
hit.
at Mag 7, I think is down 15%. Microsoft is down, I think, 30%. Yep. And so there are bargains out here. And Microsoft is one that we like to use as kind of the poster child for, what's good in technology. Yes, it's cheap. It's had a massive reset in terms of its valuation, and yet it's trading cheaper than Walmart and Costco and Coca-Cola and McDonald's and all these other great companies. Microsoft is a great company. I think we're going to be surprised by the earnings that come out when they report, and I think this is one, along with the tech sector, you can pick and benefit over the long term.
And what about software within tech? I mean, we're talking about CrowdStrike.
You have to be careful. What is essential software versus what software can be replaced? And I think Microsoft is one of these essential software companies where I cannot replace my Excel with some type of AI-developed spreadsheet tool. It's not going to work. My Excel needs to talk to your Excel, and therefore I think Microsoft is a long-term beneficiary of AI.
And of course, yeah, and they're also using AI.
Exactly.
I think that's what people forget with a lot of this, right?
Right, that's it.
They didn't just ignore it and sit and put it over here somewhere.
Exactly, but they're embedding it into Teams, into Excel, into PowerPoint, into all of their applications that just makes those applications even stronger.
All right, next email is from Dave. Earlier, you were talking about how the U.S. Fed will always be data dependent in the wake of the Trump admin replacing seasoned professionals in key reporting agencies with political appointees. Can the data still be trusted as it was in the past? Or is data always data?
Well, it's a great question. It depends on the data that you're referring to. So if it's a survey, then perhaps it's not as reliable as other hard data that can be measured through whether it's sales or GDP growth or whatever it might be. As far as the appointees, the Fed is a very, very important institution to not only the U.S. economy, but to the global economy. So this is where I think politicians are going to be scrutinizing those potential appointees with a greater focus, if you will. And I don't think you just throw in anyone that has no experience and expect them to gain or win the nomination. So with Kevin Warsh, I'm comfortable with this. I don't think there's any concern there. And again, it comes back to a committee. It's the Federal Open Market Committee. The committee votes on it. It's not just one individual. So in this case, I don't think you have as much politics as you do with some other areas of the U.S. administration.
I think we forget, though, there's been politics pretty much in every appointment in the U.S. that ever happens.
Absolutely. And
it's rare to not find politics probably involved.
True. And what we've seen, actually, especially with the Fed, is that those individuals that come in that might have been a politically favorable appointee, they end up honoring the institution and making decisions based on what the mandate of the institution itself.
All right, let's get one more in here. This is from Sal, an email. It says, looking for your POV on copper.
Yeah, copper, it's funny. At the tail end of last year, we put out a note saying that we think copper is the new gold, right? Mm-hmm. So gold has had its run, and we think copper now can see significant upside over the long term. We know that we're heading into a deficit for copper. Supplies are quite tight. With all of the energy infrastructure that's going to be required to power the data centers or the EVs or just if the U.S. does advance in terms of manufacturing, we need a lot more copper. There's more upside to come.
All right. Lots more to talk about. Well, we're out of time. Philip, thanks as always for joining us. Appreciate it. Philip Peterson, Chief Investment Strategist at IG Wealth Management. Thanks very much for joining us today. And he's up next with the open. He's back. Trading gets underway in 30 minutes from now. Have yourself a great day.